Hi guys, welcome to the channel. Yesterday I made a post yesterday on how I trade, and I posted it on my WhatsApp status. So if you want to have access to my WhatsApp status, my contact be on the description below. Let's start. So how do I trade? What I was saying in that write-up was when I come to the chart, right? Highest time frame because I did not mention time frame. It's 3 hours. I will check if price should get here. What will happen? What is price actually doing first? So you just wait for a bit. So check how I trade, right? So the first thing I said is on going to the chart, I look to see if price is making a correctional move. That's a retracement or the impulse move, which is the expansion. So from what I'm saying is I trade structure. That's just what it means. So if I'm trading structure, this is the impulse move. This is a correctional move. This is the impulse move. This is the correctional move. Impulse, correctional. So this is retracement, expansion, retracement, expansion. So that's what I'm talking about. So I'm trying to see that. So in this case, this is 3 hours, right? So how will I know? This is an expansion, right? Expansion, then this is a retracement, this is an expansion, a retracement, an expansion, a retracement, and an expansion. So this is a retracement and it's trying to make an expansion. So if you go to the 15 minutes, you see what I'm talking about. Do you see it? This is what I was talking about. So I will look for which one price is doing first. Then the second one is I will mark my key levels and important candles on supply and demand zones. So break of structure or if created already, like in this case now, if you should come to the market, your break of structure should be around here, right? But in this case, it will be your target because it has not yet happened. So where is our break of structure from the previous swing? Is this one here, right? So we'll have here as our protected low and there as our target. So we have a trigger, we have entry around this zone and a target around here. So how will I get my zone? My important candle would be coming. I'm trying to delete this markup. This is on Google. My important candle would be this black one. And you see how price did until I see break here before I would say, okay, price has started changing. And what is the difference between these places? So now I have no choice to utilize supply and demand zone. So what I would use is this particular one here. So if I am very, very tired and I don't want to wait for confirmation, I enter at 50%. Stop loss below it. Let me just show you. So this would be a buy from here, right? Stop loss maybe a few pips below this and take profit to where I told you the target was, right here. This this is as simple as this. So if I've just said this, you see it has gone how many pips now? Or how many percent? This is 1 is to 17, but it has gone 1 is to 12 already. Just yesterday. See? So this is what I'm talking about. Um, so you see what I was saying? Why did I mark these zones? Why did I mark this point, this particular point, and this particular point? So I looked at the 15 minutes because I will not take any of these trades because the last 2 days when I was trading, I took a whole lot of losses. I don't know if I was gambling. I would say I was gambling because I was not even using my strategy to trade. So you see, on reaching here, we have waited for confirmation here. This is the next important candle, this break. And guess what? But still wait to see what price will do here before I finally enter, of which I would have gotten out here, liquidated here because of what price did here. Right? This should be a news. Because of what price did here, I would have gotten liquidated and it would have still went to my own direction. But I also want you to pay attention to this place. The reason why I marked here was it was the first break. This is the first one, and it got mitigated, and this one is not mitigated. So I expect price to react from here. In case you don't understand, I would do a video on important candles so that you see. You can just leave a comment if you want that. Then you've created already, right? And target. So this is our target. This is to help me determine the direction of the market. So you see, because I already marked all of these things, I know that it is actually going to be bullish. You understand? It's going to be bullish and I'm targeting here. If we are in a consolidation, I mark the high and low of the swing to see whether it will break first. Okay, whichever will break first. So what I mean is, let's see if I can see consolidation. Let's assume I'm in this range here. Just a small tiny range. This place here. This stuff. All I need to what I'm saying is I'm going to let me zoom in. I'm going to wait to see which one will break first. Let's assume this has not happened. We just have it. Better still, let me use this one as the range. It's just this candle. So we see price what price has been doing. I want to see which one will break first. Full body candle is what I am looking out for. Do you understand? So you see in this case the high broke. So I'm expecting to buy, but where? So after this break of structure, which I took it, and this is actually not my swing point because I I defined it. I don't just mark any high and low as swing point. I have a particular one that I defined, and if you want me to talk about that too, you can drop in the comment section because not everyone tends to hold. Some are just liquidity graph and stuff like that. So the ones I tend to use, that should I see a break, I'm very solid that this is a break. But if I don't see a break, it is not a break. Do you understand? If I see something like this now, like this one, I know it is actually a real one. And I see something like this, I know, nah, this one, there's nothing you tell me, price to go. So you just tend to have rules around everything, everything I'm trading. So you see this particular range, yeah, this is a swing I would use. Excuse me. So you see this particular one here, this is a swing I will use. So I have this marked up and this marked up. So you see when price gets here, I'm just using it as support and resistance. Price gets here, I'm going to sell. Price gets here, I'm going to buy. So if I see something like this, on this retracement here is where I'm looking to buy the next high. And in this case, it will be this break of structure high. And because there's a zone here, right here, I'm not going to target it because this particular zone here is demand, sorry, supply, and this is my demand. So you see what I'm saying? So this is what it is going to serve as. So on failure to break this particular one, I expect it to break the one below. Just simple this thing like that. So I will just keep this like this support and resistance zones, supply and demand zones, whichever you prefer to call it. And you see, it actually reached my target because this low brought this high. This high failed to break the main one that brought this one. So the one that brought this one, which is this, is going to be taken by this high, which is which it did well. Let me see. There, this candle here. And from there, I'm out of the whole misery. And also pay attention to time because I not talk about timing. That's sessions. Check this. It's towards evening around 7. I know by 5 I'm out. I don't used to be on chat like that, but I'm just telling you because if some people don't respect me, but you can also trade. I believe more on price than time. You understand? Price movements than time. So I just believe that time just helps price move faster. Yes, it increases its volatility based on a particular time. But I believe 100% that with structure, everything will fall in place. So whether it moves fast now or not, just like the way you see this particular zone, you know that it is a Pacific and Asian section. And from even London, look at London starts where around this place. So you see the movement in London here. But look at this. This is New York station. Did you see? Anything around 5 I'm out. So look at what it happened here. Like that again. So I'm not here to teach all this. I'm just trying to review what I wrote, what I posted. This is my waiting period to see which one breaks first. And I already told you how I would even enter. I would also decide to trade this thing high and low if there's a liquidity grab. So this is what I'm saying. That if price should come here and fails to break, you understand? I've already explained the whole sentence. On price mitigation, my zone, I wait for confirmation on the lower time frame. So what I not do is show you how I would enter this market. So let's go to 1 minute and see what I would have done. So this is confirmation. If I see this, of which I did not attempt not to get this particular one. Let's see whether this one would have given me. Yeah, it would have been here now. My confirmation. All these things would have been played out. Then here would have entered to get this one. So on this line of this one, I would have entered top right here, big profit here. Not on the tip of the zone, no. Because remember, it is a low that I'm grabbing. So this is 1 is to 80. But on reaching here now, I would want to see the same thing I see there, which is an important candle shift. So you see, this important candle of the thing is very, very key in my own concept. So this is my last important candle. Entry here, stop loss just below here, and take profit should be the high. They brought it, which is this high here. This zone here. Remember when I said that it is going to be the zone? Yes, 50%. Because there is a zone here. That's why I draw this box. So this is going to be it. And this is 1:4. So see, just from here, I'm having 5 plus what? 8. 1:13. $130 fixing $10. So $100, 1.3. So you see how it is done. I do it. Then target will be the high or low that brought the retracement leg. So what I'm saying is this. You see, in this case, remember this is our breakout structure. Then this is the high that brought the retracement leg. So the target will be here. That's why I've been saying the target is here. That is the realistic. So it is called the realistic take profit. This is one of the things I learned from Akindamola. That's karma, having a karma. So this is what I learned from him about take profit. Because when I was trading, then I did not actually understand take profit. I just know that okay, this is it, this is it. And there was one of his video when he was talking about realistic take profit and did expected take profit or something. So I just stick with a realistic one because in most cases, sometimes mine doesn't usually get where I think it will get. So I just tend to just secure the bag, secure the what I already have. So this is how I trade. And I have to know saying I have a fixed risk, which means my lot size fluctuates depending on the zone and size. So you see, in this particular place now, what I'm saying is I'm even going to risk management. Um, say I'm risking $10 in every trade. It is $10 I'm going to risk here. So now, should this zone even be like this? Should this zone be even like this? I'm coming. Should it be like this? I'm still risking $10 here. To have this one is to 41.6. So you see, the lot size I'm going to use on the first one is giving me 1 is to 17 or thereabout. And the one I'm going to use here is going to be different. So that's what I'm saying. I'm just going to this is 1 is to 17, yes. I'm just going to increase the lot size on the second scenario. So my risk to reward is minimum of 1 is to 2. So if I'm going to let's assume I decide to use a small swing like this one in this zone that I see something like this. This is even more than 1 is to 2, right? Because there's a brick of structure here. It's just the same thing. It doesn't matter whether it is higher time frame or lower time frame. You can do this thing in 1 minute, 3 minutes, so far as they know what they are doing. That's just it. So we see an important candle win. A supply zone right here. I don't know why I keep mixing demand and supply. This is a demand zone, right? But let's say I enter here to buy it rather. So this is my realistic. Let me bring this thing down. So this is my realistic take profit. Do you understand? I'll not go and be targeting the one now from the higher time frame because anything can happen. So I enter here, take profit, stop loss below this zone. This is already 1 is to 3 and take profit here. The reason why most people run away from this lower time frame is because they don't tend to really understand their concept. Or I would say time frame. They might understand their concept, but they don't understand the fractality of price. If you want more about fractality of price, write it in the comment section. So you see, at first I was a very patient trader, but the person that taught me trading the way it is a scalper. And I think I was not a patient person per se in real life. So when he started teaching the way he was teaching, I now related more to him because he is my kind of person. So I understood that. And he spoke very well about fractality of price. So now I want you to pay attention to something. I don't know if it works because I've not tested to even know anything. Anything I've said in this particular video, I've not even checked to see whether it works or not. Let's see. Really want to see this point. Okay, it's within this. So it blesses this particular zone to come back. So as I was saying, he was teaching us about news events. That's one of his videos. I mean his lives. I don't know if it was a video. It was a video because it is actually like an online course. And he said the zones that price tends to be sometimes news events are the ones that mitigate them. And you see a sharp move like this. So if you see a sharp move like this, you don't know it's news. And imagine the liquidity it grabbed. How many people are in a buy here? Grabbed all of them. So you see the last mitigated one is the safest, the last swing point, which is below this, the safest move for you to do until you see a graph, then you continue. So now this becomes the last safest zone. You put your stop loss and stuff like that. And also, let's go back to 15 minutes so that you see what I am saying. And if you should check here, what did you notice? That price has been creating nothing but liquidity here. Look at this one. Look at this one. So this is also a liquidity. And this is your safest zone because it has not been mitigated. And no liquidity grab here, but there is here. So you see, price did here. This is where I was talking about the other day, the other time. So on going to the upside now, I want you to pay attention. I'm going to talk more about important candles. So you see this right here from this candle, the break of this candle. This is my first important candle. And I want to see the second one. Price did not break, we'll just be paying attention. You see, price did not break, just the lows, trailing the lows of the important candle. Why did I not pick this one? Because there's no break until this one. So if you want to know if you are still in a trend, this is what I do. I'll just tend to mark those the important candle until I see a break like this. So until a break like this, I would tend to, because I know it's at a zone that I'm expecting now. You see it has mitigated the zone, and I see something like this. I'll go to 1 minute. What will I look for in the 1 minute? Let me show you how I would enter this. On reaching to the 1 minute, I'll do the same thing. What has price been doing? It has been going up. Sometimes there are losses, so it's not 100%. So low, low, even this low was not taken. Even in regards to this, you see, we are still in one candle. Then this broke to this one and this broke. So this is where I would enter. I would enter here. I just set a limit order here and short this. So now me shorting this would go further down than this low. But remember, I love to prioritize that particular low because I cannot come and targeting maybe a zone inside here and it will take my whole time because I'm a scalper. I cannot stay for long. So in this market, and one thing he usually does then was I don't know if he still do it. I think he still does because he does one to one, one to one. In the way he marks his zone, let's assume this is my zone here. What he only pays attention to is 50% of this zone. So now that it has flipped, many people will see. You enter at 50% and go out at 50%. So you see, he enters here, he gets out here, enters here and gets out here. So you see, consistently, he can take a lot of trades in a day. And in most cases, most of the time, he's profitable in all of these trades. So it depends on how you use risk to reward or trade management, actually, or whatever it is. But for me, personally, I don't like to trade 1:1. That's why I said my minimum risk is 1:2 because I know the risks involved and I know what I need to do. So that is just it about it. I wanted to show you something because in my when I found my own strategy, because it is in confluence with structure. So my strategy here, as I stated, is structure with zones. So the base is structure, then the zones are what I usually pay attention to. So whatsoever it is, I prioritize structure. So on not this year, this year, right? What I do is this. I was backtesting on this. Initially, if you all know Jeffrey Benson, you know if you're in Nigeria and you know who Jeffrey Benson is, I started learning how to trade more with Jeffrey Benson, most especially the psychology levels and I think Fibonacci, Fib levels. So those were what I was using there when I started. So it was all from him. I learned a lot of things. So I just want to go to 3 minutes. So I was back testing something, and I remember one of my friends. His name is Amber, but we call him Mamba. This particular guy wanted to know how I trade. Then I was telling him important candles, blah blah blah, but he still I don't know if he understood what I was saying because then it was not this particular step by step. I was just telling him this. So it was just too much. And the reason he asked is something like this. He saw me trading and I was just adding entry. I think I added 2 entries then. I don't know if he still remembers this, but I remember. So he was asking, so what happened here? Let's go to 15 minutes, right? What happens here? You see, when I say you should be trailing your lose, well, if you are trailing your lose, you will come to believe that this is the last one that broke. So this is where the beginning of the retracement starts. So if you want to trade the retracement, this is how you trade it. If you want to trade the continuation, you should start from here based on what structure is giving you. So this particular pair, I chose it because of Jeffrey Benson, because then it was just G he was trading. So I just love the way Jeffrey Benson was. And he still is now because he's the kind of chill guy. He doesn't like to stress. I just love the way the guy does his things. So you see, using my own strategy now, not Jeffrey Benson's strategy, but I found out. And it was on G because I love this way. I even to look at gold. In as much as the person I knew Forex from, the person I started learning Forex. But do you know what is Forex? All those things, those terminology, stop loss, everything. The person I learned from was a lady. Her name is Queen of Pips. So anybody that has met me, to teach him or her the basics, I used to just refer them to her videos because she really helped me. I understood a lot of things from her. So now, although I have a beginner video, I still don't feel like I did justice to it the way she did because I think she tried to make it a master class, and she did it. It was a master class, I think, and it was free. She did it free, like she made sure she touched the main things. It is not 1 hour; it is actually 3 videos of 1 hour, so it's like 3 hours, something thereabout. So this is it. This is it. And most people that I even give those access to just go and look for her, I'm very sure they don't even watch it because most people cannot just sit down 3 hours and watch it. Or even that 1 hour, they prefer to see a movie. But this is what I'm saying that if I see a 15-minute break like this, remember my entry, I will just wait for a retracement on the lower time frame. The reason why I'm using 3 minutes here, it should be 1 minute, is because I cannot go back. So you see here, and sometimes 3 minutes is better because it will just give me clear entry. The first entry is at the break of this particular important candle because if you see if you are trading, it's just the same thing over and over. And I get this. This is 1:13. The second one too, the important candle that broke this. I used the supply zone because the important candle is here. Supply, it has a supply zone. I'm going to talk about that if I'm teaching important candles. So you see this 17. So this is approximately 30. 1.4 thereabouts. This is not a loser yet. This is 35, 45 rather, right? 31 plus, this is 46, and this is a loser. 1 is to 11 is a loser. So that's to show you that it is not a holy grail. You still lose. So a holy grail strategy, right? So this is 46 plus 8 is, I think there should be another one. 46 plus 9 approximately is what? 55, right? 55 to this particular one is 60. This is 70 approximately. Then this is 93, and this is 100 and 104 or 5 thereabout. So approximately it is here. Why did I choose here as take profit? Because it also did differ how long I'll stay in this market to wait for it to play out. Because I might not take all of this trades, to be honest. I might not take all of it. So you see, after a little retracement, it bounced and later did in the next day got my TP. So 105, 1 is to 105. I know it's sounding crazy. So if you're reaching 10, you're having almost 1,000. Yeah, 1,000. You're reaching 10, 10, 10, 10, 10 each. You are losing just 10. And if you are truly a lose, you are given a trail lose. In most cases, I will just go to 15 minutes and trail lose. Let's see. Maybe it would have even taken me out. Yeah, I think. Yeah, maybe it would have taken me out here. But I would love to put it maybe here. I don't know. Sometimes I don't even feel the lows. Once I just see that the last low, yeah, this place is where I would have put the last low that I created. That I got the entry. That I'll just drop it there. So should it take, I'm just risking 10. And from the other ones, I've already gotten some profit. So this trade management, one more of it I can still explain. Just drop or explain it for you. So that's it. And same thing here. I got this ingredient. This is a zone which I saw that there's a liquidity gap on the higher time frame zone. So let me show you. You see this? You see that there's no closure. So I expect this load to be taken. And after this load to be taken, where is the zone to enter? This important candle. So after it came, it bounced. And I expect also for this to happen. That in this particular zone, since there's a liquidity gap here, price should react from it, just like I did in gold, and probably retrace to one of these particular areas on which I would have been looking for. Let me see. But this is the important candle here, and you see it's a very wide one. So I'm going to be looking for this zone, this one here. And this is 3 hours. So it's a very big zone. If only it was 15 minutes, let's see what I would have been looking out for. So I've been looking out for this particular supply, sorry, demand. Why do I keep fixing these whole things? Or maybe I will use, what are they saying? You see, so from that particular up zone where I saw this, I would have sold maybe, and there's no confirmation here. I would have sold maybe at this point, like that. But I just, if you want to trade profitably, just mark, know where you are going, know where you are entering. So you know your triggers, know your entry, and know your target. Please don't forget to like, share, and comment. So if you want anything that you want me to talk about, you can just put it. I think this is the most educative video. This is the most educative video I know that I've done. That touched every single step of how I trade. That's no, not all, but most of it. All, if I say all, yeah, stuffs, important stuff like trade management, risk management. I spoke about risk management here, but in-depth risk management because sometimes it's not just, you know, everything is not like blueprint. Like there are some times that you just have to shift some things. So it is not just static. Unless it is this, I will not do this now. So those things are not touch them, but that's it for now. Like, share, comment, and subscribe. Until the next video. Peace out, guys. Guys should stay safe. Remember, this is December. Don't trade what you don't understand. In fact, a newbie, stay out of this market. Wait till maybe second week of January, maybe ending. But from second week of January is when you should be thinking of coming back. What you want to do in this market now is just try to learn, back test, know what you're doing.